currently two major topics in the logistics and industrial sector that is keeping especially the occupier side, be that manufacturers, retailers, or logistics companies, very busy to reconfigure their supply chain network. E-commerce remains one of them. At the EXPO Real Forum last year, highlighted expectations that the channel approach, be that multi-channel or omni-channel, will give way to a fully integrated customer experience. And 12 months later, now, this is exactly what we can see start happening. The customer satisfaction, customization, and fulfilling individual delivery requirements is fast becoming the major success factor. To fulfill this promise, the supplier side, so the supply chain side, is very busy to implement and test new innovative distribution models, and in particular focusing on the last mile, so the urban logistics, which is the most difficult, the most complex, and the most costly part of distribution. The second big theme is all around disruptive innovation. The Internet of Things, new technologies, and big data is already having a big impact on business decisions today. But you could argue that that these topics are getting a lot of attention at this moment, they are not yet getting as much attention as they really should. So there seems to be a consensus that in particular big data and connectivity will play a big role going forward. But there are other innovations, such, for example, 3D printing or robotics, where many today believe that these will not have a big impact on the sector, and that they will probably have only a small impact on some niche sectors in manufacturing. Well, if that is true or not, only time will tell. But one thing is very important, that companies need to keep an eye on these innovations to not miss a development, and then see suddenly their business models to be disrupted. Alongside these two big themes, there are another several factors that are quite important today and that occupy the supply chain side. And these factors are evolving mostly around the risk of disruption, so be that natural disasters, political unrest, or a more and more stringent legislation around sustainability or compliance. And there's another quite important or interesting factor here that will, going forward, have a significant impact on business models. And that is a broader shift in mindset, driven mainly by younger generations, that is giving way to the sharing economy. So here you have to think Uber or Airbnb, who demonstrate actually that a company can be hugely successful without having their own network and inventories. So their business models mainly evolve around offering customers what they want by way of sharing existing unused capacity at a competitive price. Many incumbents actually still fight this kind of model, not by offering a similar service, and therefore competing for market share, but actually by using legislation in their defense. Well, they have been successful in some countries, but the question is for how long? As customer has learned what is possible, they will not be content to go back to the status quo. So what does that all mean for logistics? Well, that's quite difficult to answer in a time where a lot seems possible and there are a lot of interesting ideas, but nothing has really been proved yet. So currently JLL is doing a survey together with Transport Intelligence, one of the leading research agencies in the transport and logistics sector. And we are focusing on supply chain challenges and innovation to understand where potential disruption or innovation could come into play going forward. This research is still ongoing, but we already had some interesting sound bites from a number of interviews that we've done with supply chain executives across Europe. So here's what they told us. What the sector is seeing is there are a growing number of pain points that currently occupy the supply chain managers. These pain points, they evolve around this risk of disruption. They evolve around the growing number of parcels, the shorter delivery times. They evolve around the problems delivering into cities, so congestion and traffic restrictions. And they also evolve around, as I already said, environmental impacts that are quite important. So also, it's quite early in terms of already conclusions of our research. What we can see are 3 areas that really going forward will play an important role. One is city logistics, which is driven obviously by e-commerce, by individual deliveries, and all the problems to deliver into the cities, and how real estate will move into the city to support deliveries going forward. The third area is global location strategies. That's quite interesting. We've heard a lot of reshoring or nearshoring trends that are happening. They are happening especially in the US. We're not seeing as much at the moment in Europe. And most of the people we've spoken to, they are not expecting a deglobalization of supply chains. Rather, what we are seeing is a spreading of risks. So location strategies are becoming more diverse. Manufacturing locations are not in one location in Asia, but they are spread over 3 or 4 or 5 locations. And the supplier part is broadening. Now, this could bring back actually some parts of manufacturing into lower cost European countries. And here currently we are speaking mostly about Eastern Europe. The third interesting area is the real estate and the real estate models going forward. We've already heard today in earlier discussions that real estate needs more innovation, that the occupier side needs more flexibility, and therefore the models for real estate might have to change. So we might have to see something similar to Uber or Airbnb, sharing capacity rather than predominantly leasing square meters. Might be an interesting topic and maybe something the panel wants also to pick up later on. So where are actually today the opportunities for investors? Well, definitely what we are seeing is the need for more supply. More and more inventory is being moved out of shops and into warehouses because that's what increases the flexibility and makes delivering parcels quicker. But currently there is not enough supply in Europe to actually fulfill all the demand that is out there. So we will see ongoing new supply, and that will bring new product onto the market. We've already heard earlier a lot about how these new buildings might look like. Well, there will be definitely more specialist users, such as, for example, consolidation centers closer to the big cities and also closer to the big seaports. Or there might be shared units or city logistics. So there are new types of usage being at the moment developed across Europe. City logistics, I've already said that. Warehousing has to move into the city. Now, that's a quite difficult topic. How these buildings will look like is quite difficult to say. They are probably going to be something like a hybrid between existing stock that is already in cities and kind of redevelopments. And last but not least, and that is quite an interesting opportunity, they are the traditional facilities. And these traditional facilities are facilities that are between 8 to 10 meters high. They are a little bit older, but they resonate still strongly with the occupier side. So yes, occupiers need new buildings, they need higher buildings, but they also need still the older typical warehouses, because not all parts of the supply chain needs brand new buildings. So that's something also for investors probably to rethink their strategies, but it would offer much more supply on the market, including traditional buildings. So in conclusion, we've seen last year really a record year for logistics and industrial investment. We expect that this year we see a similar level of capital flowing into European logistics and industrial assets. Certainly the demand is there. But this high competition that we are also seeing on the market is raising a question. And this question is, how far down can yields go? We've seen a lot of yield compression over the last 12 months, roughly 60 basis points for the European aggregate. In some cities and markets have even seen yield compression as much as 100 basis points over 12 months. Now, for our conventional outlook, we expect that yield compression will continue, potentially at a slightly lower pace that we've seen in the last few months. But then there's another interesting discussion going on in the market, and that is discussing a structural shift in yield levels, because with the rising of the importance of the asset class, warehouses, and the high competition that we are seeing in the market, the growing investor base and all the better understanding of the market, there's really no rationale why warehousing yields should remain as far in their spread from offices and retail yields as they are today. There is a logic that we might see some kind of reducing of the gap. Well, I'm not saying that we are going down to office or retail levels, but definitely we expect that we're seeing warehousing yields, logistics yields, closing the gap towards the other asset classes. Thank you.